What if everything you own lost half its value overnight? What would that look like? Well, let's imagine this scenario playing out in real time. Stocks are down 50%. Bonds are down 50%. Real estate is down 50%. Commodities like gold and silver are down 50%. This type of drop would be unprecedented in modern history. Even cryptocurrencies, which have been immune to this kind of drop so far, they too have dropped by 50%. We will cover what this would mean for people who hold large amounts of cash. Those who have outstanding debt, and even those who have been investing in alternative assets like fine art. The answer might surprise you. If you woke up tomorrow and your net worth was cut in half, you might be shocked, confused, and scared. You might feel like you lost everything, but in reality, your purchasing power has doubled. Specifically, what if this drop in asset values was driven by a new announcement from the Federal Reserve that our currency is losing half of its value every single year? Every single asset class drops by exactly 50% overnight. Let's say you wake up tomorrow morning to find that all of a sudden, every asset class has dropped in price by 50%. If you were to check your portfolio this morning, you would be absolutely devastated to see that your net worth has dropped by 50%. Now, what if we combine this drop in asset prices with some of the worst fears that investors have about our current economy and monetary system? Consumers would panic and rush to buy everything they need, right? Because they know that they will soon lose half of their purchasing power. Asset values will soar to unsustainable levels, and then eventually they will all drop in price. By 50%, when the Fed announces that they are re-losing half of their value, in 2 years, you'll only have $25,000 worth of purchasing power. And in 5 years, you'll only have $3,125 worth of purchasing power. The money supply is now growing faster than ever. The middle class would quickly become the new poor, and the poor would become the new homeless. Society as we know it would completely collapse. Those without large amounts of debt will struggle to keep up with the rapid price increases, and eventually, they too will be forced to take on debt to maintain their standard of living. In this video, we're going to walk through how such a massive shift in our monetary system would impact investors. The Federal Reserve could try to fight this drop in asset prices by printing more money. There will come a day when it slows down and even stops. And when that happens, asset prices will begin to recover. I know this is a very serious topic, and it can be scary to think of what would happen if everything dropped by 50%. Especially when we're already seeing record high inflation and the money supply growing faster than ever. First, if everything dropped by 50%, it would actually be a great thing for the economy because it would double your purchasing power. If this trend continues, we will lose half of our purchasing power within the next decade. Don't try to time or make big trades based on what you think is going to happen in the future. Just stick with your plan and ride out any short-term volatility. You could buy twice as much stuff with the same amount of money. People would panic and rush to buy everything they need because they know that they will soon lose half of their purchasing power. As consumer demand skyrockets, prices will increase. Asset values will soar to unsustainable levels, and then eventually they will all drop in price by 50%. But that would only make things worse, because it would accelerate the drop in the value of our currency. So first off, let's go back to the original scenario where everything drops by 50%. A lot of headlines would start with phrases like everything is down 50% or stocks plunge, wiping out 50% of investors' wealth. Now in reality, this scenario is impossible because there are many assets that don't fluctuate in value at the same time. For example, while stocks, bonds, and real estate may be down 50%, the price of a Big Mac wouldn't drop by 50% because McDonald's can't just reduce the price of their menu by 50% overnight. There aren't enough investors in the Big Mac market to cause such a significant price drop. But let's suspend belief just for a moment and imagine that this is actually possible. The price of your home, your car, food, energy, healthcare, vacations, and everything else you consume is cut in half overnight. You could now buy twice as much stuff as you could before. But sadly, human beings are wired to feel pain more than pleasure, especially when it comes to losing money. If you lost $500,000, you'd probably feel devastated. But you could put that money to good use and buy a brand new Tesla Model S. Pay off your student loans and still have $250,000 left over. But unfortunately, most people wouldn't think of it this way. They would focus on the fact that they lost $500,000 instead of the fact that they gained an extra $500,000 to spend. Instead, the stock market would probably drop even further. Investors would panic and sell off all of their assets, causing prices to continue dropping until eventually everything is valued at half of what it used to be. But now let's combine this scenario with our worst fears about our economy and the future of our currency. Imagine if the Federal Reserve announced that our dollars were losing half of their value every single year. This means that if you had $100,000 today in 1 year, you'll only have $50,000 worth of purchasing power. If this was happening today, every asset class would immediately drop in price by 50%. This would be the worst possible outcome for investors, because it would crush demand throughout the entire economy. As consumer demand skyrockets, prices will increase. When this happens, the wealthy will benefit because they can take advantage of cheap debt to purchase hard assets. In extreme cases, people would borrow money to buy necessities like food and energy. But if you're thinking that this is unlikely to happen, just consider that between 2008 and 2020, the United States increased the money supply by 900%. And if the rate of inflation continues to surprise economists and policymakers, we could see another 900% increase in the next 12 years, which would devalue our currency by 50%. Okay. So here are the 3 main takeaways from this video. But this wouldn't last long, because the second takeaway is that the United States is losing half of the purchasing power of our currency every single year due to the quantitative easing and money printing that has been happening since 2008. And finally, if both of these scenarios occurred simultaneously, it would be devastating for the economy and society as a whole. Now, even though we're seeing record high inflation right now, so if you're an investor, it's important to stay calm and keep buying into the market on a regular basis. And if you want to learn more about how to invest in a volatile market, check out this video by a FCKN book and study you lazy a hole. Thanks for watching.